At what stage in the purchase process should someone seek specialist accounting advice? Ideally, an initial short meeting should be held when the prospective purchaser has an idea they want to buy a franchise. They may not be totally sure that they want to do this, but they're keen to look at the various opportunities. We will discuss questions like, what is it like to be in business for oneself? And how is this different from working on salary and wages? What are the disadvantages and advantages of franchising? One's background and aptitude for being a franchisee, and the difference between working in the business to working on the business, and why both are important. The process of due diligence and indicative costs. A discussion like what I'm suggesting here has no pressure attached. The prospective purchaser is just wanting to learn more about the financial side of running a franchise and can learn from accountants' experience with other franchises. Any ideas, concerns and observations can be put on the table and discussed easily. However, as usually happens in my experience, the purchaser has already found a franchise and wants the accountant to start on the due diligence process straight away. This is okay, but it usually means that the standing back and having a look at the possibility stage has already happened. Just a word of advice here. It is best to find an accountant that's skilled in advising on franchising. Naturally, the people that work in the franchise industry know the area well and can advise from personal knowledge and experience. What documents and information should a franchise accountant review and consider? For the establishment of a new franchise location, it is important the prospective franchisee takes special care. There will be no historical trading records. In this case, the franchisor should be able to give a guide as to what the key numbers will be based on other locations. There is more risk in new locations, and more care needs to be taken with these. For the purchase of an existing franchise unit, that is a franchise resale, it's important the prospective franchisee obtains the following: past annual financial statements prepared by the vendor's accountants for the past 3 years, a copy of the franchise agreement, a copy of the disclosure document, copies of past GST returns, details of wages paid to staff and owners with hours worked, daily, weekly and monthly sales summaries, a copy of the lease documentation, calculations of the custom accounts, an average value of sale with trends over the past 3 years. What work should a prospective franchise purchaser specifically ask a franchise accountant to undertake? The purchaser should ask the franchise accountant to assist them in making a decision as to whether the purchase is a wise one or not. It is not the place of the franchise accountant to decide, but he or she can give the purchaser good information on which to base his or her decision. I encourage prospective purchasers to contract me to prepare a 36-month financial forecast. This highlights things on a monthly basis like sales levels, gross profit margins, net profits, bank account balances, funding and equity movements. It shows if the business is going forward or backwards. It allows for what-ifs. For example, what will happen if my projected sales are 10% less or 10% more? I invite the prospective franchisor to suggest changes. Together, we weigh those up to produce a comprehensive planning document. If bank finance is involved, the bank will inevitably want to see this document. The process also highlights the ROI, the return on investment. The prospective franchisee should have been given a lot of information by the franchisor and the vendor. It is important that the accountant sees all this information. The purchaser should ask the accountant to advise on the best structure for the business. Should it be a company with a trusted shareholder or maybe a sole trader? or a partnership operation? In each case, it depends on the circumstances. There is no nice and neat cookie-cutter answer. If the purchaser is borrowing money for the purchase, then advice should be sought on the most efficient means of borrowing funds. A discussion between the bank and the accountant will assist with this. In fact, I think it is really important for there to be good lines of communication between the franchise accountant, the franchise lawyer, bank and broker. And this is done in the best interests of the purchaser. The franchise purchaser should also ask about how the tax system will work for them. The franchise accountant should discuss the PAYE system, how provisional tax works, and also fringe benefit tax. It is also important to think about what kind of financial reporting system is required. Some franchise systems have their own, but it is important to make sure that the financial reporting system you use is robust and easily allows for the measurement of operating results. The old maxim is true: what you can measure, you can manage. Your accountant will be able to endorse or recommend a good system for you. Based on your experience from an accounting and business perspective, what are 3 common pieces of advice you would give to a franchisee? Make sure you are suited to being in business as a franchisee. Being self-employed is very different from being an employee. Be prepared to spend a certain percentage of the purchase price on due diligence. That is, having your accountant and lawyer help you check out the business you're looking at purchasing. You are putting your life savings on the line, so it is wise to do this. I'm always amazed at what sometimes shows up in the 36-month cash flow forecast, and I referred to this earlier. So don't scrimp and save on your due diligence. Your accountant and lawyer will be able to give you a quote or estimate of what this important cost will be. Have the long game in mind. What do you want to achieve by being a franchisee? How long will you do this? And what will you do following this?